The People's Bank of China have officially confirmed that they will be banning banks and other financial institutions within the country from trading U.S. Treasuries, and they are encouraging investors to sell their holdings. They are saying that there is no end to the maturity period of U.S. Treasuries, and there is a high risk that the U.S. government will confiscate the principal at maturity. They are basically saying that they don't trust the United States government anymore, and they are telling their own citizens, the people of China, to start selling their bonds. The timing couldn't be worse because there's already an issue within the treasury market with yields rising significantly and bond prices falling because there's an abundance of supply. The treasury market is very sensitive to any supply and demand changes. When there's more supply, prices fall. When prices fall, yields go up. Well, if there's more supply than demand, we're seeing the effects of this right now. And with China pulling out, dumping all of their U.S. treasuries, this is gonna put even more pressure on the treasury market. It could cause bond prices to crash even lower, which will make borrowing money for the United States government even more expensive. In response to this, Jerome Powell said that he doesn't think that this is a big deal, that this is just China trying to find someone else to blame after their economy slowed down so much over the last few years. But this move could be the catalyst for something much bigger. We know that U.S. dollar strength has been slowing down. In fact, the dollar index has been falling for 3 months straight. And the reason behind this was because the U.S. Federal Reserve were raising interest rates so aggressively until recently. Other countries were raising rates too, which made their currencies strengthen. So the U.S. dollar lost its appeal as a safe haven currency because the yield offered by the U.S. dollar was far higher than other currencies. For example, if you could get 4% in Japan or 3% in Europe, why would you take a risk holding the U.S. dollar? Well, the U.S. dollar started losing its strength and began falling in value, which means that the price of everything else went up and caused inflation. Well, one thing that helped the U.S. dollar recover some of its strength was the introduction of new sanctions on China and the banning of certain exports to the country. This made China desperate to hold on to their U.S. dollars because they need them to import things from other countries. For example, if you want to buy microchips from Europe or Japan, you must pay for them in U.S. dollars, which meant that China needed to maintain and keep buying U.S. dollars. But with China feeling more and more confident in their own economy, the yuan is recovering. Their exports are doing well, so they don't need to import as much stuff from overseas. And since they don't need to buy U.S. dollars anymore, they can start selling. Now, it's important to mention that China has been selling off their U.S. treasuries for quite a while now. We've seen a steady decline in their holdings every month since May of this year. As of August, China sold a further $7 billion worth of U.S. debt. China's decision to sell U.S. treasuries reflects a growing distrust in American leadership and the belief that Washington could prioritize its own interests over its obligations as a global creditor. This sentiment was also echoed by Russia, who announced back in July that they would no longer be investing in U.S. treasuries. It's no coincidence that these two countries are the largest rivals of the United States. Both China and Russia have been sanctioned by the U.S., and both of them are becoming increasingly aware that the U.S. dollar is a dangerous asset to hold. According to Zero Hedge, China's decision comes amid an escalating geopolitical rivalry with the West and marks a stark shift from 2009, when it became the largest U.S. Treasury holder, marking a key moment in the globalization of China's nearly $4 trillion foreign exchange reserves. As China ramps up its efforts to develop the yuan into a global currency, Beijing's move may encourage other countries seeking to reduce their exposure to the US dollar to follow suit. By the way, if you're getting value from today's video, please hit the like button. It helps the algorithm and helps me reach more people with my daily updates. Now, before we move on, check this out. Bitcoin is spiking higher after dropping below $49,000. Bitcoin is currently priced at around $51,000, which is a gain of 2.6% in the last 24 hours. This is great news for everyone who bought the dip. There were some rumors going around that BlackRock, the largest asset manager in the world, were adding Bitcoin to their 401k plan. Now, we've confirmed that this isn't true, but this did cause a spike in interest, and the price of Bitcoin rose as a result. The dip that we saw earlier today was most likely bots or algo traders entering shorts. You see, when the price drops suddenly, computers that are set to automatically buy the dip kicked in, causing the price to rise rapidly. This can happen either way. When the price rises rapidly, shorts get triggered, and when the price falls rapidly, dips get triggered. If you look at the order flow on exchanges, you can clearly see a lot of orders entering in the early hours of the morning when the price dropped to around $49,000. Then, when those orders were filled, you could see the orders to buy starting to appear. This spike in buying volume drove the price up to $51,000, and personally, I expect the price to continue rising. This is because we're still within the bull run, and September is usually a good month for Bitcoin. Have a look at this chart showing the price of Bitcoin throughout the entire year. You can see that we redo another green month, and if we do get some positive news in the next couple of weeks, the price of Bitcoin could rise even further. Gold and silver are also having a good day, with gold rising 0.42% and silver rising 1.48%. The price of gold is currently sitting at around $1,900 per ounce, which is the highest it's been in over 2 weeks. What's interesting is that we're not really seeing a correlation between the price of gold and the price of the US dollar. Usually, when the US dollar gets stronger, the price of gold falls and vice versa, but have a look at this chart. The price of gold hasn't moved much in the last few days, despite the fact that the US dollar index has fallen almost 1%. If we zoom out, you can clearly see that gold is decoupling from the US dollar, and it is acting more like a safe haven asset. The World Gold Council says that central bank buying has been robust in 2023, with 1,139 tons purchased in the first 8 months, which is the highest level since 1967. Silver is also being bought in large amounts, with 114.7 million ounces purchased by ETFs in the first 8 months of 2023, the highest since 2010. The recent moves from China and Russia show that countries are beginning to lose faith in the West, and that is driving them to buy more gold and silver, which is likely to cause the price to rise further. Now on to some breaking news affecting XRP holders. Ripple's CTO has just tweeted that he is leaving Ripple Labs to focus on his health. In the tweet, he states that it's been an incredible ride. He's grateful to the community, customers, partners, and the team at Ripple. He thanks them for their support and understanding. He ends the tweet by saying that he'll still be involved in open source projects and will continue to contribute to the XRP ecosystem. David Schwartz is one of the co-creators of the XRP ledger. He is best known for his contributions to the development of Ripple. He was the CTO of Ripple Labs, but according to the tweet, he's now leaving to focus on his health. Some people are speculating that maybe he's sick or unwell, but this hasn't been confirmed. What we do know is that David Schwartz is a believer in XRP and cryptocurrency, and that he will continue to be involved in the space. I think that's it for today's video, like always. If you want to stay updated, make sure to subscribe to my channels. Smash the like button, check out some of my other videos, and have a great day.